If you've been thinking of buying a home in California, then you need to stop what you're doing and watch this video. It could save you tens or hundreds of thousands of dollars. So over the last couple of days, it's been in the news almost everywhere in California, a brand new loan program that just came out that's offering buyers up to the full 20% for their down payment. So obviously this is creating a lot of news and a lot of buzz. So today what I wanted to do was invite Dennis from eMortgage Capital onto the show, and we're going to go over everything about this program. So explain the details, go over the pros and the cons and some things to look out for, and basically just figure out if this is a type of program that would be a good fit for you. If you're a returning viewer, thank you again so much for your continued support. I really do appreciate it. If this is the first time you're checking out this channel, hi, I'm Josh Alexander, your local Orange County real estate agent and host of Orange County Housing Market News, your one-stop shop for all things Orange County. So if you're thinking of buying or selling a home, make sure you hit that like, subscribe, and follow button, because I put a new video out every single week just like this to help buyers and sellers win in today's market. So let's go ahead and get into today's interview. Hey everybody, I want to go ahead and welcome Dennis back to the show. Dennis, thank you for joining us. Dennis is from eMortgage Capital, and today we are going to be going over probably the most talked about loan program that I've heard about in the last 2 years, the Dream for All. So Dennis, thanks for joining us today, and let's go ahead and get right into it. So can you kind of go over what this program is and why it's getting so much hype?
Yeah, so normally down payment assistance programs are minimum down payment a lot of times, right? You get a second lien for a 3.5% or 3%. This new one actually goes down to 20% down payment assistance, which is huge, right? Making the monthly payment way lower than if they go with a regular, even with a regular FHA loan with 3.5% down, no down payment assistance, they're going to end up with much lower payment than if they actually use their down payment.
Yeah, makes sense. Yeah, so basically this program is up to 20%. So they basically can get up to 20% of the home's value to be able to put down, so they can take off private mortgage insurance. Is that correct? If you
Correct,
put on
yeah.
the full 20%,
Yeah.
but you don't have to put down 20%, correct? So if you have, let's say, maybe 3 or 5% saved up, this could be a good option for you as well. If you want to add an extra 5, 10, 15% on top of that to get to 20%, is that kind of correct as well?
Yeah, correct. And you can actually use a part of it, up to 5% of the 20%. You can use towards closing costs also if you want.
Oh, okay. Perfect. So what's the catch of this program? Because obviously it sounds kind of too good to be true. So what happens on the back end if you have this program, you get into a house with this 20% down? When it comes time to sell your house, what are the logistics involved for doing that?
Yeah, so it's definitely an equity share program.
Okay.
So what that means really is that, first off, you get, say we have a $500,000 house and you get the $100,000 as down payment, then you're still going to have to pay that back at one point, right? It's a silent one. You don't make any payments on it. But then let's say a few years later, let's say that the value has increased. So say that you have to sell your home. It's increased to $600,000 now, the value, right? First off, you have to pay back the $100,000, the down payment, and then off the other equity gain, you have to also pay 20% of that equity gain back to the government, basically, right? So,
gotcha.
Half that, right?
Okay, so the buyer can get up to 20% down, but what happens if the buyer, let's say, has some money set aside already and they don't want to use the full 20%, they only use maybe 10%? Does that change how much they have to pay back at the end?
Yes, it does. The equity share then goes down. So the equity share is only for the portion that they actually borrow, right? So if they borrow 10%, then it's 10% equity share. If it's 15%, that is 15% equity share.
Gotcha. So basically just depends in terms of your payout. If you can borrow a little bit less, if you have more saved up, that will benefit you in the future, because obviously you want to be able to keep as much money as you can when you go to sell your house to be able to purchase your next home or do whatever you want with. So you don't necessarily want to use the entire 20% if you can help it. If you have some saved up, it'll help you in the end when you go to sell your house.
Yeah, correct.
Okay, so the other thing I did want to bring up that we haven't talked about yet is that it does require you to have some type of home buying counseling sessions in order to be able to get this type of loan. So, one, can we kind of go over maybe just kind of like the basics of what you know so far about those, and then what you're seeing so far in terms of how long it takes to get those type of things done? Should buyers start that process before they start looking for homes? Once they get into escrow, how does that typically work right now?
Yeah, so all first-time homebuyer programs typically requires you to go through a counseling with a HUD certified counselor on the
Okay.
loans. Any type of loan, but for example, this down payment assistance, then it's just like an independent, right? So it's not no one that is actually involved in the loan, so you can actually ask questions and get real answers without being, maybe
Okay.
fooled into something that you don't want to do. And what we
Okay.
see is that those counseling times are being pushed out now. So I heard about
Okay.
one of these loans that got in escrow yesterday. The counseling isn't until the April 14th, so 2 weeks
Okay.
out. But if you're lucky, you can go faster, right? But that was just on an example that I heard about. So maybe, you could potentially risk paying for the counseling and just get it, so you have it if you're
Mhm.
interested in this loan program, just to try and speed things up, right? Um,
Gotcha.
they
And
cost
that
money, but
counseling is about $100, I believe it was when I saw it. Is that correct?
something like that. Yeah. I don't exactly
Okay.
know how much they are, but, so
Okay. Got it. So if you are thinking of purchasing a house using this type of loan program, it's probably a good idea when you talk to your lender, you get that pre-approval that you might need to sign up those classes right away so it's done. That way, when you get into escrow, you're not going to have any issues because the loan, I'm assuming, can't be fully approved until you get those counseling sessions taken care of. So if your counseling session continues to get pushed back as more and more people are applying for these loans, you could be in a situation where you get into escrow and now your counseling sessions push back 6 weeks or something like that, and it's going to screw everything up. So that's definitely something to take into consideration with these type of loans. Is that is one of the requirements. So make sure you talk to the lender. They'll probably have a good idea of what the wait time are, because if they do these type of loans every week, they'll probably get an update on how their current buyers are working with these programs and how long it's taking. So make sure those are questions that you ask for them. Okay, so let's go ahead and say you bought the home for $500,000. You're selling it for $700,000 10 years later. So you took $100,000 of this program's money to be able to get that 20% down payment. So when
mhm.
you go and sell it for $700,000, what do you end up actually profiting once everything is said and done?
Yeah, so they then with the new sell price of 700, right, and minus whatever you bought it for, so it's a 200,000 equity gain right
Yep.
there. So it's 20% off of that equity gain, meaning $40,000 then.
Gotcha. So you pay
But
that $100,000 back. Okay, go ahead.
yeah, no, I was gonna say, but it's also money that you gain from actually not using any of your own money. So it's still a win-win.
Correct. Yeah. So it's not something where you're having to pay back money where you basically are either being charged for it because this is an interest-free loan type of a product almost, where you're that $100,000 just sits there and you just return it back at the end. So can you kind of go over maybe what type of buyer this type of home loan would be good for and have at least worth looking into to see if this makes sense for them?
Yeah. So what I always, you don't want to, obviously, I never want to discourage anyone to buy a house, but it's always
Hmm.
good to at least have the down payment, in my opinion, right before you go into a down payment assistance program. At least
Okay.
have 3% because you're gonna end up with some closing costs no matter, unless you get seller concession, seller credit to offset some of
Yeah.
the closing costs. So you always want to have some of it. Another thing, like you know, buying a house is always going to be some cost also when you actually get the keys, right? So
Yep.
uh, I always want to recommend people to still, even if they want to use the program, to actually have some down payment saved.
Gotcha.
Who is it good for? Like, you have to be a first time buyer. That
Hmm.
first off. And I like it in a way, right? That you can refinance once. You can
Okay.
subordinate this the 20% once, right? And still
Okay.
not having to pay it back at that time, right? So you can still buy it now.
Okay.
Then when rates drop, you can refinance it first. You just
Yep.
subordinate the second. Then, so that's good. Um,
Okay.
but yeah, I wouldn't. maybe it's for someone that isn't planning on staying, you know, forever in the house potentially. Because let's say that you do want to start using your equity, right? Like that's normal, right? You have the house a few years,
Mm-hmm.
maybe do a cash out refinance, or you put an equity line on the property to use that for renovations or paying off credit cards or whatever it might be, right?
Yep.
Because a lot of times we can, on regular finance, we can still save borrowers money, like overall money, right? Maybe mortgage
Yeah.
going up, but a lot of things, other liabilities are going down. With this one though, if you borrow 20% and then you do a second refinance, you're gonna have to pay it back, and then your mortgage payment is gonna go up quite a bit, right? So maybe,
Yeah.
in my opinion, it's good for someone that maybe it's not the forever house. You want to
Okay.
get into a house and get the equity gain. Maybe do one refinance, right? At least just to bring down the payment, bring down the rate. But then,
Yeah.
maybe sell it after, down the line. Then we can still cash out some or get some money off of that equity gain, I would say.
Gotcha.
Because it's going to
Okay.
be a
So
big difference in the monthly payment if you just refinance that 20% into the first mortgage. It's going to be a huge
yeah.
bump up.
Yeah, that makes sense. Yeah. So basically, the benefit of this program, especially right now with higher interest rates, is that one of the main disadvantages of purchasing a home right now is rates are a little bit higher than they have been. Most people in the industry are anticipating them to fall a little bit. So this is allowing you to one-time refinance. So you have to kind of pick and choose wisely when you want to do that. But when you do that, the first refinance, you don't have to pay back the 20%. But if you decide to refinance again, so let's say rates drop to 5% a year from now, you refinance and they continue to drop to 4%, you can't really take advantage of that without basically having to pay that 20% back and increasing your monthly payment on the house pretty significantly. Is that kind of a good recap of what you're saying?
Yeah, correct. And also that first refinance can only be a rate and term refinance, right? So you can't pull any money out. Then they're going to want their 20% back.
Okay. So this is something where people, if they were thinking of being able to use the equity in their house, this kind of locks it in for a longer term period. Because
Yeah,
if
I
you
would
have
say.
that 20%, yeah. Okay. So that's something to definitely consider. If it's something where you want to be able to use that equity more quickly if you purchase a house, this is definitely not the type of loan you want to go with. However, if you plan on, let's say, staying for 10 years and then maybe upgrading to a bigger house, your family's growing, or moving someplace different, this could be a good option to be able to get you into a home right now. If you don't have a giant down payment, get into a home, be able to take basically advantage of 80% of those equity gains that you're going to get, and then take that when you sell it and then go purchase another home, versus waiting and renting for another 2 or 3 years, dumping money down the drain and not really building your equity. So it kind of seems like for those buyers, it might still be a good option to look at this program, because you're going to be able to take advantage of your equity growing, but just don't have some of the advantages of having a little bit more equity in your home in terms of how you use your house, kind of like a bank, to be able to do these refinances on there.
Correct. And it's also a lot like purchasing power also, right? I was running one scenario
Mm-hmm.
for a client this morning, and
Okay.
he wanted his payment to be maximum, around $3,000 a month. And I ran the scenario with a normal down payment assistance program with 3.5% down.
Okay.
It would be right around 400,000 in purchase price. If we
Mm-hmm.
did this 20% down, the Dream for All program, then it's actually a $475,000 house he can afford with the same payment, right? So
Gotcha. Yep.
Instead of having to buy maybe way further out from the city that he wants to buy, now he can actually buy in the city he wants to live in, right? So
Yep.
a lot of pros with that too. And I sent you a calculation yesterday, right? I'm sure
Yep.
you can cut that in here in the video, and you
Yeah.
can see there how much of a difference it makes on the monthly payment just with a regular FHA not using down payment assistance program, or a 5% down conventional, or doing this Dream for All program.
Yeah.
Huge,
Yep.
difference in the
Giant.
monthly payment there.
Yep. Yeah, so it's definitely something that will make sense for a lot of buyers. Right now, especially in Orange County, Southern California in general, if you're renting a house right now, there's oftentimes you're spending 30, 40% of your monthly income on that rental. And it's hard to save up for a down payment, especially if you're trying to get to 20% down, which again, you don't need to have to be able to purchase a home, but a lot of people are trying to aim for that 20% down. I mean, you'd be looking at 10, 15, 20 years most of the times try to get that if you're renting where the majority of your money is going to rent every month. So this kind of helps shortcut that process, get you into a home sooner and able to start taking advantage of the equity gains when home prices go up. So another thing that I did want to kind of go over in terms of this program are some of the cons. So one obvious one is that if you're thinking of buying a home and you're going to want to sell the home in 2 or 3 years, it sounds like this program's probably not great for you because right now with the market how it is, home prices looks like they're starting to stabilize in Orange County a little bit. But if you're a short-term homeowner, it sounds like this program might not be a good fit for you because you just don't really have a lot of equity in your home. Is that correct?
Yeah, correct. Maybe you don't get enough appreciation on the property, right? You don't have that, obviously less money to pay off the 20% that they want off your equity, right? But you're not going to see that much. It's almost going to be then like you're renting a house, almost, right?
Yeah.
You
Exactly.
you own it, but you're not getting any money for it if you sell it just a few years later, potentially.
Yeah, so it seems like the sweet spot for this loan is not going to be this is your forever home, but also you probably want to plan to be living in this home for, I would say, at least 5 years. So if you're in between those, that's probably a good indication this might be a good program for you. Now, on the on the con side as well, are there some issues with trying to get into this loan? Like, are buyers going to have problems submitting offers on homes if they have this type of loan? Does it put them at a disadvantage?
Yeah, so we don't know exactly how long they just launched the program, right? So even the ones that have just gotten into it, we don't exactly know how long it's going to take because it's a government loan, right? But I would say, at least 30 days, maybe even up to 45, maybe more, right? So but at least 30. So we're not going to be as competitive on an offer as if you use a regular FHA loan or a conventional loan where we can close in 2-3 weeks, right?
Yeah.
So that's obviously going to be looked at by the selling side that maybe it's a little risky. Another thing is that we can't lock in the rate right away, so that can change up until the point where we're going to lock. It takes a little bit longer for getting the underwriting done as well. So, it's just a little bit riskier, right? But like if you're working with a good loan officer, they have already broken down income. They already know if you're going to qualify, right? But, so that's why it's important to work with a good team. For sure.
Okay. So it sounds like in terms of placing offers, you will be a little bit disadvantaged because it will be riskier because you might have to have a longer escrow period. So to be safe, especially in the beginning, until these numbers get worked out to see how long it's going to take, you might have to do a 45-day escrow instead of 21 days or 30 days, which if the seller is looking to sell their property quickly, can put you at a disadvantage. And then I know you talked about rate locks. For those buyers that don't know what a rate lock is, can you kind of go over that really fast as well and explain that so that makes more sense?
Yes. So when you're locking in the rate, right, after you have locked, then it's not going to change. If you're on a 30-year fixed or whatever fixed program it is, it's not going to change. Mm-hmm. However, the rate lock gets locked on the person's social security number and property address. So let's say that we lock the first day. Mm-hmm. 5 days in, we get the inspection report, and the inspection report is showing all kinds of stuff, right? And buyer doesn't want to buy it anymore. So they pull out. They still have the lock for 60 days, meaning they cannot go and just make an offer on the house next door the next day. Right? They're going to have to wait 60 days before we go into process again. So that's why we want to wait until we're 100% sure that the buyer is buying this house. Then we lock.
Okay. So on a typical, I was going to say typically, usually when you're locking rates, it's going to be pretty quickly after you get into escrow. So everybody signs the contract, and then the next day, typically lenders are starting to talk about, okay, when should we lock the rate? Should we lock it now? Maybe a day later, but it happens pretty quickly, correct?
Yeah, Correct. Normally we
Okay.
lock basically same day. Yes, we get.
Okay. And then on a normal loan, once you lock it, if you were to pull out of the property and go try to find another one, are you having that same issue where you're frozen for 60 days, or is this something unique to these type of loans?
It's just unique to the program, I would say.
Okay.
It's, because you have to, these loans, it's not gonna be. It's only like 2,300 of these loans that they're gonna give out. So you kind of reserve your, your loan amount there. If you pull out, there's already other people in that's waiting to get their loan locked as well, right? So that's why.
Okay. Yeah.
If we lock and they don't like the house and we pull out, and then maybe 60 days later, maybe funds are over. Maybe there's no.
Yeah.
Maybe they've used all the loans for this program. Right?
Yeah. Yeah, which I anticipate happening relatively quickly. Yeah.
Yeah, that's why we want to be 100% sure that we're buying this house before we lock in.
That makes sense. Okay, so I mean, there's definitely some pros and there's also definitely some cons to these programs. There's like every program out there. So being able to know the difference before you get yourself into one of these is definitely something that I wanted to have you on today. Now, in terms of the type of buyer this for, we kind of went over that. The cons, we went over what cons you're looking at with this type of a loan product on here. But in general, I mean, are you having a lot of conversations with your clients right now that are interested in this program? Is this something where you haven't really heard much about yet? Or what kind of feedback are you getting so far since it launched? I know it's only been a few days, but just trying to gauge the popularity, because it seems like it's all over social media. It seems like it's all over Reddit. It's all over everywhere right now. So just trying to kind of see, is this program something that you're getting a lot of interest in already?
Oh, definitely. I've sent out a couple pre-approvals already, right? It's just a few days in. Just, even people that I, been working with the last few weeks, right? Not like maybe they were capped at a certain purchase price, right? They weren't comfortable going higher. Now they actually can, so which is cool, right? And some of the clients, they didn't even know about it, right? So it's been a lot. Basically been 90% of our time right now in the last few days. Just talking to people about this program, and getting people hyped on it. And I think we're definitely going to see, we're going to see a lot of these. They're going to fly off the shelf.
Yeah, and that's kind of the anticipation I have as well from talking to the other lenders that offer this program. It's the same thing. They've just been inundated by questions. So it seems like even though they say it's going to last to the end of summer, I have a feeling it will dry up a little bit quicker than that. So it seems like based on the conversation, this would be a good program for someone that doesn't have a lot of down payment, just to kind of wrap things up, doesn't have a giant down payment, but wants to get into a house, doesn't want to pay PMI. They don't have to get the full 20%, but they can cut it down to a smaller percentage if they want to. That way it's a little less risky for them if they need to sell quickly. And it's good for someone that maybe wants to own a home for 5 maybe to 20 years or something like that, and be able to eventually sell that home, get the equity, and purchase another house. It seems like a good best practice for this type of thing based on what our conversation as well, in terms of the risk, would be also, yes, get approved for this type of loan, but also try to get approved for maybe a different type of loan as well that doesn't require these funds. Because that way, if you do fall in love with the property, you find something that you want to buy, you at least have options available. Yes, you have this larger down payment option that you could utilize. However, if you're also approved for a different program at the same time, that gives you the option that if you don't want to use this, or funds dry up, or you don't want to worry about the rate lock, you still have a backup option to be able to place offers. Is that pretty correct on that as well?
Yeah, that you're pretty spot on there. Definitely.
Okay. And then the cons, in general, it's going to be a little bit tougher to get your offer accepted. You'll have to have a longer escrow period. Most likely that we'll kind of have to wait and see what the times on those are. You can't lock in your rate as quickly, and with rates fluctuating so much, that presents a little bit of risk if you're inside escrow already and you don't want to lock your rate for another week and a half. So it seems like there are definitely some risks with this, and something that you should talk to your lender about. So if you are considering this program, make sure you go over all the information with the lender you're using to be able to give you the pros and the cons, to make sure you know the risks involved with these, because with every loan program, there are going to be some risks involved. So Dennis, if people want to get more information about this program, qualify for this program, if they have any questions at all, what is the best way for them to reach out to you?
Easiest way is always calling my cell phone.
Okay.
Number is 949-945-4964. I'm sure you can post it on the
Yep.
video as well, or in the comments.
Okay.
That's going to be the easiest way. Or email me. I'll shoot me a text and I'll shoot over all my contact info. Basically, that's going to be the easiest way to get a hold of me.
Okay, perfect. Yeah, I'll definitely put that on the screen. So if anybody has any additional questions, they want to see if they qualify, contact Dennis. Not all lenders are going to be able to offer this program. They have to be able to do Cal FHA or Cal HFA loans to be able to do this. So you have to make sure that the lender you're working with can actually do that first. Dennis is one of those lenders, so that's why I wanted to bring him on here today. So if you have questions, feel free to hit him up and they can go over all the details with you. So Dennis, thank you again for joining me and providing a little bit of clarity on this new program. It's always nice to have you on here and kind of get some advice on what's going on the lending side of things. So thanks for joining me today. And everybody out there, thanks again for joining me. Until next week, stay healthy, stay happy, and I'll see you on the next show. Bye, everyone.